Sorry, Jeff, I turned off my mic. You are live.
All right, good to see everybody. Thanks for coming. It's good to have you here today. We've got a very special guest and a very special topic. I'm quite interested. I'm going to grab a notepad and take some notes. If you're watching us on YouTube, feel free to like and subscribe. It helps a great deal. We really appreciate it, and it helps us keep bringing you good guests. In addition to that, if you're watching on any platform. If you're watching on GoToWebinar and you have questions at any time today, just click on the little questions box. That'll send us a question, and we'll make sure that we look at it. If you're watching on YouTube, just chat it in. We'll pass it along to Steve. So thank you for being here. My name is Jeff Gibby. What I'm going to do is read a legal disclaimer. Let's go. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Also, we're not going to recommend that you buy or sell any security. We're not compensated for promotion of any securities, and nothing we say today should be construed as investment advice or the solicitation to buy a security. So there you go. Our guest today started his career decades ago, like I think 5 decades ago, if I'm not mistaken. Steve Primo. He initially traded on the floor of the Pacific Trading Academy, and he's been using the same methods that have just been kind of consistently working decade after decade after decade after decade. Steve's a great teacher. I love to have him in here because he's very clear when he talks about things. He teaches. He does a really good job of kind of just explaining concepts in a way that's very digestible and understandable, and I think that's a talent. Steve, let's go ahead and get you started. How you doing?
Hey, Jeff, thank you. You're doing great.
All right. I just made you the presenter, so it should ask if you want to share your screen.
Okay.
Cool.
How's that?
That's perfect. I can see it. I'm going to go ahead and turn off my camera and my microphone, and then I'll give it's all yours. Let's go.
Okay, thank you very much, Jeff. Thanks to everyone. Thanks, Greg, for helping me set up here. And thanks to all of you attending today. I promise to have a great presentation for you because I'm going to introduce an actual trading method that I've been applying, as Jeff said, for almost 5 decades now. This is what we call our dynamic duo of trading. These are 2 extremely consistent edges that, when put together and applied in unison, can form a really high level of consistency in any market and in any time frame. Let me share with you what I mean here. Let's look at this chart firstly as I switch over to the next slide. An actual chart here right off the bat. Okay, now this is a chart in Amgen that's just about a month or so ago. Now this is the way most traders trade, and I think this is why most traders fail. They'll see a chart like this and they'll say to themselves, wow, looking pretty good, but maybe they go to that chat room where that guy on TV says it's gone up a little bit too quickly, maybe it's a little bit too high, too overbought. So if you're long, possibly you may want to sell or maybe move your stop up. Or if you're thinking about going short, maybe it's a good time to think about that. So traders will listen to someone or something else. And for the next week or so, it actually looks pretty good. Okay, it looks like it's working out all right. But here's the difference. With these 2 edges I'm going to be sharing with you today, the first edge, even though the market looked like it was topping out or overbought, the first edge actually generated a buy signal right here. And the second edge I'm going to be sharing with you actually confirmed that buy signal, saying that it was a high probability that it was going to be a successful trade. And in the next 4 days, the stock went up 40 points. So this is the program I'm going to be talking about and introducing today, my dynamic duo of trading. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. As Jeff said, I've been trading now for nearly 5 decades. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. A specialist is just someone that makes markets in roughly about 50 or 60 stocks. So I made markets in stocks like IBM, US Air Waste Management. I made markets during the crash of '87 and the bull market that followed. I left the floor, the trading floor, in the mid-90s to manage money for companies and also to trade my own personal account. And in about 10 or 15 years ago, I formalized specialist trading with my sister site, Pro Trader Strategies, with one goal, and that was simply to educate traders all the things I've accumulated in my nearly 5 decades of trading. So that's what you'll see today. You're going to see something that I have been trading for nearly 5 decades. I continue to trade with, and these two edges I firmly believe will take your trading to the next level. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying the dynamic duo, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company only, all examples are strictly for educational purposes only. Now, another way to get more education on a daily basis is to follow us on X, formerly known as Twitter. I would recommend copying our little handle right there at SPCLSTTRADG. That's abbreviation for specialist trading, because every day I post between 5 and 7 different snapshots of signals or methods of generated or little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on X. Okay, with that stated, let's begin today's educational presentation. And I want to start out with something that my mentors explained to me. When I first started trading, I struggled tremendously. I was doing probably the same thing that many of you are doing now, following tons and tons of so-called trading gurus, right? We didn't have chat rooms or trading rooms at the time, but we had newsletters. There was no such thing as the internet, 50 years ago, but we had newsletters that I subscribed to. I was holding my breath, listening with bated breath to every type of news event coming out, earnings, economic conditions, economic reports. Also, I was watching all the so-called trading gurus on TV after the market closed, seeing what they thought of the market. And guess what? Nothing worked, okay? This was 50 years ago. And most likely people are using the same outdated things today. It's because there's not a lot of consistency. Every once in a while, those things will work and then you'll give it all back. I'm sure you've all been there before. I know I was some 5 decades ago. So what my mentors taught me was to trade with the simplest things. Those are the things that actually make you successful. And here's what they said. They said, Steve, trading is really simple. All a trader needs to do is want what the market wants. I mean, think about it. If the market wants to go up, then you want to be a buyer. If the market wants to go down, you want to be a seller. Okay. The only trouble is we're never really taught to learn how to listen to what the market wants. We're always taught to listen to some guy on TV, somebody in a chat room, some economic report or some earnings report, and that's supposed to tell us what the market wants to do. But we never really listen to the market, even though we think we are. For example, if we look at this chart, this older chart in Meta, okay, someone would say, well, Steve, why do I need to take a course on knowing what the market wants to do? I can see it wants to go up. So I bought, okay? And the minute you buy, look what happens, okay? How come you didn't know that the market wanted to turn around? Or you can look at this and say, Steve, I know the market wants to go lower. I sold my position with a loss, but I don't want to hold on to it because it wants to go lower. It's easy to tell. And then the minute you sell, look what happens. It goes right up. So you see, it's difficult to figure out because it's almost as if the market is speaking another language, okay? And the market really is speaking another language. That's why most traders have so much trouble with it. It's been estimated that upwards to 80 to 90% of all traders fail. And I think this is one of the main reasons is because we're not learning how to listen to the market. The first thing we're taught is to listen to an outside source telling us what the market wants to do. But what we really need is a translator. You see, in order to get in sync with what the market wants, you need a tool that translates what the market wants to do. It's not just enough to say, well, I'm just going to learn the language. It's too difficult. We just need a translator. And there actually is a translator. And this brings us to our first edge in the dynamic duo. This is what we call the PET-D. Now, this is a tool I was introduced to on the trading floor. Now, at the time, it was so difficult to calculate. We used to call it the formula because you had to sit there almost every tick with the handheld calculator and calculate on a tick-by-tick basis what the market wanted to do. So if we ask what the PET-D is, what we've done is turn it into a proprietary algorithm. And that's really to help it make it easier for you to apply because it's just too difficult to trade with if you're trying to look at something intraday, and even if you're looking at end of the day charts, you have to spend a good hour or so calculating it. So what we've done is we formulated it into a color bar tool. So it simply paints the bars one or two colors. That's it. Now, the best way to apply this is as a trend directional indicator, because it's basically telling you on a tick-by-tick basis or translating what any market wants to do in any time frame. So think of that. For the first time, you're actually hearing it from the market what it wants to do. So let's go back and look at those charts again. Remember, we thought, well, the market wanted to go up, and the minute we thought it was going higher, it went lower. Well, what happens if we apply the PET-D color bar tool? Well, it instantly colors the bars, either green or red. And green bars simply mean that the market wants to go higher. And red bars simply mean that the market wants to go lower. Now, the PET-D is not a predictive tool. It doesn't tell you how high something will go or how long it will go much lower. It just tells you what the market is doing at that moment. Now, if we look at this older chart of Tesla, okay, we thought that the market was heading much lower, and just when we sold our stock, it turns around and goes higher. But if we applied the PET-D color bar tool, well, look how it translated much earlier with a series of red bars that it wanted to go lower, and then with a series of green bars right here near the low that it wanted to go higher. So you see what a tremendous edge this is. It's a tremendous tool that you have in your back pocket, and it's the best tool in my 5 decades of trading that really tells you what the market wants to do on a short-term basis, okay? You can apply it to monthly bars, you can apply it to crypto, you can apply it to tick charts. It makes absolutely no difference. It doesn't know what it's looking at. It's simply translating what the market wants to do. Now, because it's so versatile, there are literally dozens of ways in which to apply the PET-D just by itself. So the beauty of the PET-D is that it tells you which direction you should be trading. And once you know, you can apply any method, any technique, or any strategy that is in sync with that direction. As I said, there are literally dozens of ways to apply it, multiple ways. Let me just share with you a couple that show you how powerful this tool is just by itself. Here's one that we call consecutive same color PET-D bars. This will signal a trend change. So if you have consecutive green bars, as we see here, someone would look at this and say, well, we've gone up, but maybe we're overbought. Maybe it's time to exit. Well, we have a series of green bars. And as you see, all these bars are outlined green, telling you that it wants to go higher. And look what happened after that. Now, as you see, there are darker colored green bars. That just simply means that that day, the bar closed down on the day. But guess what? The PET-D is still saying, that's okay. I still want to go higher. Even though we closed down 1, 2, 3, 4 days in a row, I want to go higher. And look what happened. It still did. So these are actually buying opportunities, not selling opportunities when you see a dark colored green bar. Or we can look at this chart here in AXON. Let's say it's going higher, and then that guy in that trading room says, this is a pullback. Look at, you have a 50% pullback here off this nice little move. Time to buy. It's going higher. Well, remember, that's the way we used to trade, listening to someone or something else tell us what the market wants to do. Why don't we let the market tell us what it wants to do? Well, we apply the PET-D, and we have a series of red bars. So the market, not me, not some guy on TV, the market is telling you, I want to go lower. So if you were long AXON here, you may want to take a little bit off the table, maybe move your stop up, or maybe exit altogether. Either way, it's up to you, but the market's giving you a signal, and look what happened after that. So you see how powerful it is just using this one technique. Let's move on to another one. We call this lowest low green bar that signals an up move, or the highest high red bar that signals a down move. So what exactly does this mean? Well, let's look at this older chart and charter. All right. Obviously, it's going lower, and all the bars are colored red. All right. So we're making lower lows, lower closing lows, until right here we have a green outlined bar, and it's either equal to or the lowest low. This is a very powerful sign that there's a high probability the market bottomed out. And look what happened. Just based off this one bar being colored green at the lowest low, it took off. All right. See how the market was trying to tell you what it wanted to do? This can work the opposite way as well. Here's an older chart of PLTR. obviously be going straight up. Some news happened right here where it gapped higher. It's going higher, but then look what happens here. The next bar is equal to or higher than the highest high of this nice run up. So what's this telling us? The market, not some guy on TV or not some convoluted system. The market is telling you, I want to go lower. And look what happened after that. So do you see the power in this tool? It can tell you on a tick by tick basis what the market wants to do. Let's look at an overall chart here in ZS, okay? And we can see here that we had a number of different either short-term or intermediate-term moves. We had a short-term upward move, short-term downward move, a long-term upward move, and a long-term downward move. How could the PET-D have helped us? Well, you simply apply it, the color bar tool. Remember, it's only going to be two colors, either green or red. And let's use the second technique once again. We see here that we had a nice little short-term upward move, and look at this bar. This red bar was the highest high. So based off this bar, look what happened. It went lower. Now, it didn't go a lot lower, but it still went lower until we get to this point right here. What do we have? Based on this low, we have a green bar, right? So that's telling us that this short-term downward move is over. Maybe you might want to go long because I want to go higher, and easy to see that we went higher until we got up to this point. And remember, either equal to or higher than the highest high is a red bar telling us that, well, it's time to exit. And look what the market had happened to do. It went lower. So this is the power of the PET-D. I've only showed you two of the different ways. There are multiple ways in which to apply it, all with high probability, high consistency, and all that will help your trading in virtually any market and in any time frame. So that's our first edge. Let's move on to our edge number 2, and this is strategy number 4. Now, this is a strategy I've been trading almost on a daily basis for nearly 5 decades. This was the first method I was taught by my mentors on the trading floor. They were specialists as well. They had been trading about 30 or 40 years each individually, and they shared with me this method that I continue to use. It's my most consistent method and our most popular method we have at Specialist Trading. Let me give you some of the highlights of this particular method. It's a pattern recognition strategy. So we're not looking at overbought, oversold. We're not looking at support resistance or moving average crossovers. It's basically looking at a pattern that repeats itself over and over again in virtually any market and in any time frame. Now, it's designed for traders looking to catch momentum. That's really the beauty of strategy 4. It will identify a momentum shift probably before you even see it on the chart. And I'll show you a number of examples in just a few minutes. Now, it only uses one indicator, and it's just a 50-period moving average, because if price is above the 50, well, then we'll only look for buy signals. If price is below, we'll only look for sell signals. It's that simple. But the rest of the time, we're just looking to identify this pattern, which we teach you in its entirety in the course. Okay, so let's look and see how strategy 4 works. Let's look at this chart. Well, we're going higher, and this is the chart in GILD. We're going higher and then we're going lower, but we really have no idea where the momentum is. Is it going down? Is it going up? We don't know what's going on. But according to strategy 4, right here, a buy signal was generated. Why? Because it determined that momentum was now building up to the upside. Now, someone would say, how can you tell that? I mean, it doesn't look like any momentum to the upside. But just looking for this pattern, look what happened after that. In fact, the very next day, it gapped up. And you could see how that identified it well before anyone else would identify that this was moving higher. And if you missed that first buy signal, another one was generated right here, and more momentum to the upside was applied. Here's another chart. Looks like absolutely no momentum, right? But let's say that guy on TV says, oh no, this is major, major support. This is where you have to buy. This is a major support line, and it hasn't been broken in ages, and this is a huge buy area. Okay, once again, how we're all trained to listen to somebody tell us what the market wants to do. But what is strategy 4 telling us? It's telling us that momentum wants to go to the downside. You're saying, wow, but it doesn't look like anything's happening. Well, look what happened. We dropped from roughly 360 all the way down to 310, and not a bad little 50-point move to the downside. Now it looked like the momentum started to shift, and we wanted to go higher. This is where a lot of traders say, okay, well, I guess we bottomed out. I'm going to buy here now. Maybe we just got in a little bit too early. But once again, strategy 4 said, nope, I have identified the momentum now is to the downside. You say, how can this be? But then look what happened. The stock fell from 340 all the way down roughly about 90 points. Now remember, nothing works 100% of the time. I can attest to that. I've been trading long enough, nearly 5 decades, to know that nothing works 100% of the time. For example, look at this chart right here in LIM. Here's a sell signal that you would say, oh, okay, well, strategy 4 is telling me that the momentum is going to be to the downside. And then look what happened. It didn't work at all. So what can we do to alleviate this? And another example, VRSK. Here we have a buy signal. So we're obviously saying and thinking to ourselves, well, the momentum must be to the upside, right? And look what happens. It goes up a little bit, mainly sideways to lower, and then falls out of bed. So this wouldn't have worked out at all. So as I said earlier, no trading method works 100% of the time. But there is a way to increase our odds for consistency when we apply these two edges. And this combination is what we call the dynamic duo. Okay, so this is what we're going to be sharing with you today. This is, once again, something I've been applying for nearly 5 decades, and you're going to see just how consistent it is. Now, let me share with you the dynamic duo rules. They are extremely simple to apply. And if you are trading it to the upside, let's say if strategy 4 generates a buy signal, okay, you're only going to trade the signal if the setup bar, that's the bar above the arrow, the buy arrow, if the setup bar is colored green by the pet D. So in other words, if the bar above the buy arrow, the signal arrow, is colored green or outlined green, then you'll take it, because these are these two edges coming in sync together to form a high level of consistency. Now conversely, if a strategy 4 sell signal is generated, you're only going to trade the signal if the setup bar, that's the bar below the down arrow, is colored red by the pet D. Okay, so if you see that bar below, it doesn't matter what the bars are before or after. If that bar below the sell signal, the sell arrow, is red or outlined red, take the signal. Why? Because that is a valid dynamic duo setup, and it holds a high level of consistency that it's going to work out. All right, so let's look at those charts we looked at earlier. Here's the one in VRSK. Remember we had a buy signal right here? Let's apply the pet D. Now, what color is the bar outlined above the buy? It's outlined red. So obviously that's not in sync with the dynamic duo rules. We have to have that bar outlined or colored green like these bars in order to take. So this is not a valid dynamic duo setup. So we're not going to take it. And therefore we would have dodged this major loss right here. You see how that helped us? Or the other example in LIN. Remember, we had a sell signal here. Now, in order for us to take that, if we wanted to have a valid dynamic duo sell signal, that bar needs to be colored or outlined red. So let's apply the pet D. And what color is that bar below? It's green. So therefore, we cannot take this signal. It's not a valid dynamic duo signal, and we would have missed a major loss right there, being short or exiting. Let's say we use this as an exiting tool. We could have still been in the trade. Now, someone would say, but how do they look when they work out? Well, since now the majority of the bars are green, all we have to do is apply strategy 4 and look at these two buy signals that were generated right here. Both colored green, both strategy 4 buy signals, and you can see the market went higher. Here was another one generated right here, a valid dynamic duo signal. It's colored green, and still one more. So that's how the pet D along with strategy 4 could help you become a consistent trader. We would have sidestepped this one losing trade and been in all 4 of these if we chose to do so. So that's the concept. See how simple it is? When you apply these two edges together, you really form this synergy for success. So let me share with you some recent dynamic duo signals. Most of these took place within the last month, some within the last couple of days. All right. Let's look at DIOD, okay? Someone looking at this would say, well, gosh, Steve, we're in a sideways market. There's absolutely no momentum. So why would I want to do anything here? There's actually nothing happening, okay? Well, maybe not, but if we apply strategy 4, it's telling us that momentum is building to the upside, even in a sideways market. Now, that's a good high probability signal, but we want to increase our odds for success, so we apply the pet D. And we will take this signal, but only if this is colored or outlined green. So let's apply the pet D. And yes, it is. So that's a valid dynamic duo signal. And look what happened. Up 22 points. In fact, do you see how it gapped up here? Now, this was just about 10 days ago. You see how this gapped up? Obviously on some news or some announcement, right? But isn't it funny how the dynamic duo knew that a full 3 days in advance? How did we know? Because the market tells you everything you need to know. The tool is we have translators now with the PET-D and with Strategy 4 that are telling us what the market wants to do. We're no longer listening to some guy on TV or someone in a chat room. We're listening for the very first time to what the market is telling us. That's how you become a consistent trader. Here's another example, an iron, all right? Once again, looks like it's going nowhere, but someone would say, well, this is institutional buying, Steve. This is where all the institutions are, the big banks are putting their money in. So you've got to be a buyer here and look for it to break out to the upside. Okay, once again, someone telling me what they think the market's supposed to do. But according to Strategy 4, momentum is building to the downside. And if we want to take it up a notch in terms of consistency, we apply the PET-D. And yes, it is colored red. So this is a valid dynamic duo sell signal. And the stock fell 38 points in the next week or so. So what happened to the institutional buying? Okay, you'll be a lot more consistent if you learn how to listen to the market instead of an outside source. Here's the chart we opened up with, Amgen. Okay, remember we thought that, okay, it's doing very well, but maybe it's overbought now. So if I'm long, maybe I want to sell my position, or if I'm a little more aggressive, maybe I want to go short. And for a little bit, it actually looks like it's right. It is overbought. It's going lower. But Strategy 4, once again, said, no, there's going to be a momentum buildup, and it's most likely going to be the upside. So it generated a buy signal. Now remember, not every Strategy 4 buy signal works correctly. So we want to make sure it's a valid dynamic signal, increasing our odds. So we apply the PET-D. And yes, the bar above it is outlined green. Now here's where students have trouble. They say, yeah, but Steve, the bar before is red. Makes no difference what the bars are before or after. All that matters is that the bar above the arrow is colored or outlined green. And 40 points in 4 days. Okay. Let's look at an example in Dash. All right, it's going much, much lower, but maybe you say, hey, looks like we're kind of bottomed out right here. We're kind of making some type of bottom and we're bouncing. So this is a good buying opportunity. We broke this downward trend. Time to go long, right? Well, if we apply Strategy 4, nope. It's saying the momentum is now building to the downside. And we apply the PET-D and both the bars are red. And look what happened. It dropped 50 points. What happened to it bottoming out? Let's look at MAR, Marriott. Now we have two signals here. Now, once again, this shows you how the PET-D can really help you with Strategy 4. Which signal should we take? Now, this one did not work out too well. If we would have bought, it went up maybe for 1 day and then closed lower. And then depending on where you place your stop, you may have been stopped out. Or maybe you would have gotten a little scared and said, gosh, this is not going anywhere. I'm going to exit. Or would you have taken this one? Most likely, if you had taken a loss on the first one, like most traders, they said, I'm not going to get back in this again. So this is how the dynamic duo can help you. Once we apply the PET-D, we see that the first buy signal was not a valid setup because the bar above is colored or outlined red. So we would not have taken that and not have had to deal with this downward movement. So we would have bypassed that and only taken this one and 48 points in the next couple of weeks, coming into just a couple of weeks ago. Obviously, some announcement once again, or something happened where it gapped up like this, gapped up like 20 points. How did we know a full week or two in advance that momentum was building to the upside? That's because this pattern repeats itself over and over again, and we teach you what to look for. All right, let's look at workday. All right, we have a sell signal right here. So this looks like a good sell signal. Someone would call this a hanging man. It doesn't work out too well. It's pretty negative. But look what happened. It went up, and most likely, depending on where you place your stop, you're pretty much stopped out. But if we would have applied the dynamic duo, we would have seen that this was colored green. So that does not fall in the rules for a dynamic duo setup. We never would have taken that trade and possibly been stopped out with a loss. We would have waited for the next one, which was right here, just a day or two later. It was a valid dynamic duo sell setup because the bar below was colored red. And look what happened. It fell 70 points coming into just a couple of weeks ago. Now, if you missed that first one, it gave you a second chance to sell here. You notice on this bounce, we had 1, 2, 3, 4 up days, but each up day was outlined red. That's the pet D telling you that even though we're bouncing, as we bounced right here, this is not meant to be looked upon that I want to go higher. This is a selling opportunity because I'm still telling you that I want to go lower. That's the pet D translating it to you. Same thing here, when we had a big up day. That's not a bottom out, it's colored red, and it went lower. See how powerful this tool is? Now, you can do something what we call stop and reverse as well, because not every setup or signal is going to work, even on a dynamic duo basis. As we see right here, we have a sell signal in Pepsi, and it's a valid dynamic duo sell signal. But it only went down for 1 day, and then look what happened. The market changed its mind. Strategy 4 says, you know what? The momentum looked like it was to the downside, but now the momentum is to the upside. On top of that, the pet D agreed. The pet D said, yes, I want to go higher. So had you taken the first setup, you would have been stopped out or exited on this buy and lost 3 points using one of our standard stop placements. But if you jumped back in and got back on your horse, you could have taken advantage of a possible 25-point gain. Okay, more than enough to make back that 3-point loss. Here's another example of stop and reverse. Okay, we have a buy signal here in TTWO. So the market is telling us, the pet D is telling us that the market wants to go higher. But then look, it changed its mind. And these are both valid pet D signals. So had you taken the very first one, well, you got stopped out basically with a 5-point loss using one of our standard stop placements. But you have to get back in. You can't just sit on the sidelines and whine and say, well, I'm not going to trade this anymore. It doesn't work. Because look what happened on the second setup. It dropped 55 points in the next week or two coming into this month, more than enough to make back your loss and to possibly make some more. Here's another example into it. Okay, as we see here, the market jumped up a couple of days, but all the bars remained colored red by the pet D. So even though this was a bounce, the pet D was telling us, don't get caught up thinking that we've bottomed out. This is what we call a selling opportunity, not a buying opportunity. On top of that, strategy 4 generated a sell signal. So we have a valid dynamic duo setup, 185 points coming into just a week or so ago. You see how powerful this tool is. Now, we know that not everyone trades stocks and daily bars. So let's look at some different markets and some different time frames and show you how simple it is to transfer the dynamic duo onto them. For example, here's a chart of the British pound. This was just a month ago in January. As we see, we have a valid strategy 4 buy signal, and the bar above it is outlined green. So that's a valid dynamic duo setup, meaning that it's a high probability signal, 440 pips in the next week or so. Not a bad little trade, right? Or we can look at this chart in the Canadian dollar. All right, obviously the Canadian dollar was going lower. We have a little bounce, and we have 1 bar green, but look at the next bar. A sell signal was generated using strategy 4, and the bar below it was red. This is a valid dynamic duo sell signal, a high probability sell signal, and the Canadian dollar fell 340 pips. The good news is, if you missed that one, look at all the other chances you had to go short and to sell the Canadian dollar. Now, this was on a 4-hour chart. Let's look at a weekly chart of GLD. That's the ETF that represents gold. Now, everyone in the world knows how gold screamed lately, how it was just going straight up. And most traders say, gosh, I missed that. How would I have known that gold was going to take such a big move to the upside? There was no way in knowing, right? Well, not really. If you traded the dynamic duo, you could have taken advantage of this tremendous upward swing. For example, this is a weekly chart of GLD, once again, the ETF that represents gold, going back about 3 years, all right? How could the dynamic duo have helped us? Well, look at all the strategy number 4 buy signals that were generated with a green bar above. Now, there were a total of 7 bars generated using the strategy 4 and the dynamic duo, and one of them wasn't a valid signal because it wasn't a valid setup. This one right here, the bar above was colored red. But each and every one of these other buy signals was a valid dynamic duo buy signal. So never let anyone tell you that you don't have the means to take advantage of these big moves. The dynamic duo could have helped you right here. Now, this is a weekly chart of gold. How about a monthly chart of SLV, the ETF that represents silver? If you're a long-term investor, you could have done the same thing going back 3 years. Here was a valid dynamic duo buy signal back here in November of 2023. Okay? And look at the big move you could have taken advantage of. So there are always signals being generated. This is how powerful the dynamic duo is. And let's look at an intraday chart, a 5-minute chart of Apple. This was just last week, I believe last Monday. Okay? We have 3 valid dynamic duo signals here on this 5-minute chart. Okay? They're all strategy 4 and they're all colored green above the bar. And in the next day, in 24 hours, you could have potentially captured 6 points. And I think it's even higher after that. Apple continues to go higher. Here's another 5-minute chart of Tesla. Now, this was less than a week ago. I believe this was exactly a week ago. We're looking at 5-minute bars. We see that we have 2 sell signals right here, strategy 4, and the bars are colored red. So this is a very strong sell signal on a 5-minute time frame in Tesla. And look what happened, 10 points in 1 day. If you missed those 2 sell signals, look at one that was delivered right here just before the 19th, where you could have taken advantage of a gap opening to the downside. So we've looked at different markets, ETFs, currency pairs, intraday charts. Let's look at a monthly chart of Micron, MU, and let's go through the whole process, okay, one last time. We're looking at this chart, and this is what most traders do. They say, well, there's absolutely nothing happening here. I'm a long-term investor, and going back, looking at these months now for about a year, going back to 2024, this stock is just basically going sideways. So why would I be interested in this? There's absolutely nothing happening, okay? Well, that's why most traders fail, because you're looking at traditional things that really don't work or have a high level of consistency. What we firstly want to do is, before we think of this as a directionless market, let's see if strategy 4 is detecting some momentum change. And if we apply strategy 4, we see that yes, it's detecting that there is going to be momentum move to the upside. I know most of you could say, well, how can you see that? There's absolutely nothing happening. Remember, it's based on this pattern that you can't see right now, but I can teach you in the course that happens over and over again, as we just saw in 5-minute charts, in 4-hour charts, in any market, crypto, currency pairs. It makes no difference, okay? So in this monthly chart of MU, Micron, it's telling us that there's going to be momentum to the upside. Now, that's a high probability setup, just strategy 4 by itself. But if we want to increase the odds even more in our favor, we want to validate it by applying the PET-D. And we'll only take that strategy 4 signal if the bar above is colored or outlined green. Now, we don't care what the bars before were colored. It doesn't matter if they're all green or all red. It makes no difference. But the bar above that arrow needs to be colored or outlined green. So let's apply the PET-D. And yes, it is. As we see, every monthly bar before was a red bar until we got to this one right here, full green bar. All right, so that is a valid dynamic duo signal. It's not only telling you, it's screaming that it wants to go higher. And coming into this month, the stock was up 360 points. All right, not based on any economic news. We're not looking at earnings. We're not listening to some guy in a chat room telling us what he thinks using his convoluted logic. We're not waiting for economic indicators or listening to who's in office or what interest rates are doing. We don't care about those things because the market doesn't listen to those things. So we should only listen to what the market wants to do. And so right here, it was telling us it wanted to go higher in May of 2025, and you could have had a nice 360-point potential gain. The dynamic duo gives you a higher level of trade consistency for any market, as you just saw, and for any time frame. So let's recap what we shared with you today. Remember, we want to apply strategy number 4 based on this pattern to tell us initially what the market wants to do in terms of momentum. We want to see if momentum is building up before anyone else can spot it. And then next, we want to apply the PET-D to confirm that. The PET-D is the translator telling us what the market just wants to do on a tick-by-tick basis. So we will confirm if the strategy 4 signal is valid or not. When you combine these two, we have what we call our synergy for success, or the dynamic duo. I've been trading this and continue to trade this for nearly 5 decades now, And we have students around the world in over 115 countries that are using the dynamic duo. So ask yourself, do you think the dynamic duo can help your trading for the remainder of 2026? I think your answer is a resounding yes after seeing the examples I shared with you that happened in just the last week or so. So let's talk about a special attendee offer for all of you taking the time out of your day. We're going to offer you our dynamic duo special. This is strategy 4 and the pet D. You're going to get instant course access, detailed instruction. You're going to learn about all the entries, all the exits, and the stop placements. You'll get the entire course rules, automatic buy and sell arrows for strategy 4, along with the pet D color bars. And there's another way also to look at it. We have a pet D ribbon bar as well. As you see in that little snapshot on the left, that's the ribbon bar on the bottom. So if you don't want to use the color bars, you can apply the ribbon. We're also going to use, I should say, give you some different ways to use the pet D on its own as a pet D stop placement and a pet D pullback technique. These are ways in which to apply and trade with the pet D just by itself. And along with all of this, just tons of information that I've accumulated in nearly 5 decades, you'll get educational correspondence. So this is a great, great offer. Let's break it down. Now, normally the dynamic duo regular price will be $29.95. That's still a great price for this much jam-packed information that you're going to be getting. But we're going to discount that today because we just came out and launched the dynamic duo special. So our special launch price is $19.95. We're going to discount that about 30%. So you're going to save $1,000. Think of that, $1,000 that in a little while will go back up $1,000 higher to $29.95. So this is a great, great way to become familiar with us, to turn your trading around, and to get 2026 on track with your trading. Try a method I've been using and continue to use for 5 decades now. Take your trading to the next level with the dynamic duo. I can almost guarantee, even though I can't perfectly guarantee, I can almost guarantee that you will have wished you became a student of the dynamic duo course a year from today. Trust me, if you do not decide to become a student of this, a year from now, you will look back and say, gosh, why didn't I turn my trading around? Now I've lost a good portion of my account and I don't know where to begin trading. And you may have to deal with some higher prices as well because the dynamic duo is that popular. So turn your trading around, take it to the next level, become a student of mine in the dynamic duo course. Here's how to take advantage of this great, great offer. Contact Metastock. We have 2 links there. You can either go to metastock.com/petd or metastock.com/saleschat. Now, those are not live links. You have to copy and paste them onto your browser, but I believe Jeff or Greg are going to post them on the GoToWebinar chat box there. I think the best thing to do is to contact Metastock at 800-882-3040. They're there to work with you. They'll be happy to answer any question and sign you up for the course if you like. So this is a great, great way to become familiar with us, to use a method that I currently use on a daily basis and at a great discounted price. You're going to save $1,000. Now, I think we still have some time left. If there are any questions or, if Jeff wants to talk a little bit more, that's fine. But we've come to the end of the presentation. I just hope that you learned something, and I really think that the dynamic duo can turn your trading around.
The first question I have is, how do I turn on my microphone?
So I had that same question with how to make the slides go forward. That's okay.
Right. It's just one of those days is what it is.
Yeah, I think so.
A little bit of a note. We've got the link on the in the chat panel, and that's also the case in YouTube. It's metastock.com/petd. There's no dash there.
Oh, okay.
But the page is live. It's working. It's looking great. I have to say that I love how straightforward and how just simple it is. You did a really good job of explaining it, but you can look at the chart. It's built into it. Like, it's just such a straightforward methodology. You've made it very, very simple.
That's one of the best things of what our students tell us. It's extremely simple. I mean, there's no a lot of thinking to do. It's strategy 4 will auto. Even though we teach you the rules to strategy 4, it's not a black box system. You'll know exactly when a signal, I should say, is identified. You'll know the rules, but it will automatically generate those up and down arrows, and the pet D will just confirm it. That's it. It'll increase your odds for consistency. It's really simple.
Cool. I just want so let me go ahead and I'm going to share my screen for just a second here.
Sure.
For a few minutes, actually. Let's not kind of undersell it. For just a few minutes, what I wanted to really reiterate is that it includes the complete strategy number 4, including the exploration, the expert advisor, the layout, the training videos. Strategy number 4 had all of these training videos that were part of it already. So you're getting that, but in addition to that, you're getting that early trend detection that Primo put together, the PETD. And Steve did a really good job of identifying that. It's very well integrated in Metastock. You got the fast and the slow PET-D. You've got your high probability setups. Very visual system. It's easy to confirm. It's easy to see. So with it, Steve talked about the training that's included for that. Here's a list of those lessons. Those are available as part of the package. Not only are you getting kind of all of the tools for implementation, you're also getting everything you need to kind of to use it as well and to understand it and to know it. There are, of course, explorations. You can go in, you can run a scan, you can find the stocks that are kind of giving those buy and sell signals. Also, you can find the stocks that are showing PET-D. So there you go. $29.95. As Steve said, it's a 30% discount, $19.95. We do back that with a money back guarantee. You can get it at metastock.com/PET-D. You can call us at 800-882-3040, and you can go to metastock.com/saleschat. So that's it. Thank you very much, Steve, for sharing that with us and for helping us put all that together. And we will thank you for watching. We'll see you again at the next one. Thanks for coming in. Thanks for being part of the event today.